Hi, good afternoon, everyone. My name is Gwen, and I'm excited to have our panelists here. Before I kind of go to you for your introductions, let me quickly introduce myself, justify my existence on this panel. So I've spent 13 years in a tech startup industry, across mostly in Asia and also Silicon Valley. I've been a founder, investor, and also in media. I like moderating panels a lot. So in my years, I've spent 11 years of that investing, mostly in early stage. So I don't have any of my portfolio companies having gone IPO. So that's interesting to me. So hearing from your experience of having gone IPO, your portfolio companies having gone IPO, a few of them. So yeah, so that's why I'm interested in this topic myself. So to my right, we have Yen. And let's go down a little bit, like who you are, what you've done, what's new, and for the audience.
Thanks for the opportunity. My name is Yan Li. I'm the CEO of the company called NIU Technologies. And NIU Technology is the largest smart lithium-ion battery-based electric moped company worldwide. The company was founded in 2014, and the company got listed in 2018 in NASDAQ. And we're selling our moped or scooters in 28 countries. So far, we have sold more than 710,000 scooters globally. And the scooters are lithium-ion battery-based. The battery is very light. Typically, it's 1 kilowatt of battery. It's about 7 kilos. You can take out from a scooter and charge at home. And the scooters are connected. Globally, our users have written, the total mileage written is 2.6 billion kilometers just since about a few days ago. And we're also selling our product in Europe as well, and in France, Germany, Spain, Italy, and you name it. That's a quick introduction, and I'll pass to Bernard.
Thank you, Yen.
I'm Bernard Moon. I'm a co-founder of Sparklabs Group. We're a network of startup accelerators and venture capital funds. Currently, we have 9 accelerator locations globally, primarily in Asia, but we've now expanded to Oman, Washington, D.C., with a new cybersecurity accelerator. And then we have a global seed stage fund that has invested in 70 companies across 6 continents. And we also have a Series A fund in Asia. And then I'm also based in Palo Alto, California.
So before we kind of go into the topic, I just want to get a sense of who the audience is. We're going to do hand showing time, yeah? Okay, who here are startups? Okay, not too bad. Investors? Corporates? Okay, so that's quite evenly mixed, right? Students? Okay, quite even. Oh, hi, these are my colleagues at Entrepreneur Fest, our interns. Very, very cool. Okay, so now we know who we're talking to. So to the topic, Are IPOs Back? When we look at this, we just had several major kind of news breakers globally. Of course, NIU, you went IPO, but last year, right? So let's compare a little bit and set an ecosystem in terms of timing. So this year we just talked about it. There seems to be a whole pipeline of IPOs coming. The media super excited, public super excited. Has there been a change from 2018 to 2019?
Yeah, I think there's definitely been a change. The excitement is back in terms of the public markets. With companies obviously such as Zoom and then Lyft and Uber, and then everyone's looking at Slack, possibly Airbnb and others. But I also think that there's sort of macroeconomics in play where the timing is good now, and then people are also looking year end of, is the economy going to go bad? Is it going to go south year end? Or maybe next year. So there's also this sort of pressure and rush for a lot of these stronger companies to go public.
Just based on my experience, our company got listed last year, so.
And on the NASDAQ in the US.
On NASDAQ in the US, yes. And I mean, typically with the US listing process, it takes about 6 to 8 months, right? So we got listed in October. That means we actually kick off in Q1 last year. But remember, 2018, Q1 was very rosy. Even Q2 was rosy. Actually, it's just exactly like Bernard said. I think Q1, Q2, a lot of companies rush in. And then as people start to rush in, actually Q3, Q4 become really bad. We actually listed at the worst timing last year. So our roadshow was second day in our roadshow, the market was down 5%.
Oh no.
Yeah, that was the October. That's a single day, the worst day of the last few years. The market was down 5%. We hit that during our roadshow. Yeah.
And kind of you knew in advance, right? Something that, but you really started the process 6 to 8 months early. It wasn't something that you could stop. Could you have paused your IPO and choose to go IPO slightly later?
It depends. I think during that process, we have seen companies who went through the process with us actually decide to delay. There are a couple companies that actually did decide to delay, and it really depends on why you want to go IPO. I mean, from our point of view, we look at IPO. Most of the companies looking for IPO as a funding opportunity. Basically, you raise fund from a public market. From our point of view, that time our cash flow is already positive, so we were not really looking for funding, but we're looking at getting company listed on NASDAQ is more branding purposes. Really get the company really put on the global stage as opposed to just in China. So for us, the valuation was a less than concern. That's one. And second, as we go through the roadshow, actually, even though the timing was bad, the entire sentiment was bad, but we still have plenty of quite a lot of public investors, institutional investors who actually believe in our story, look at our story, look at our business style. This is actually very interesting, and decide to buy stocks. And then once you have those institutional investors come in, you figure, hey, you got enough support to continue to go on.
So when you went IPO, had you already opened in Europe? Have you already expanded outside of China?
Yes. Okay. So we entered Europe in 2016, and we're in 2017, 2018. Now we actually have multiple stores in Europe. And our Europe international sales has been growing 3 to 4x every year.
So when you say branding, then let's talk about that, right? So since then, what? How has that turned out well for you, branding-wise, marketing-wise?
No, I think since then it has been great. Otherwise, I wouldn't be on the stage to talk about the Are IPOs Back,
You still think you're a young startup CEO in China or US, right?
Yeah, you wouldn't be able to get this type of exposure. So I think IPOs for a lot of startups, I mean, besides the funding, the branding aspect of it, just don't underestimate it.
And so let's kind of talk about that reason, right? Let's go to you, Bernard. You have a portfolio of companies across different stages, right? How do you recommend IPO as a potential path or potential milestone in their journey? Is that something that you kind of encourage, regarding funding options? Branding options?
Well, I mean, we're primarily seed and Series A investors, so I don't think we could sort of plan it out that way. Obviously, it depends on each market. So if you're a U.S. company, it's basically either IPO or M&A. I would say some of our more European investments, I think an IPO is a lesser sort of opportunity. So there it's more of an M&A path. Asia, I would say it's not as sort of split as the U.S. It probably still more leans towards M&A, but the IPO is a viable route. So it really just depends on the company.
So let's just take a step back then, right? So we talk about viable route and we talk about funding options, but realistically, IPO is always put in a bucket of exit options under the category, because the idea is that some investors can get money, some of the founders may take some money off the table and stuff like that. And you mentioned at M&A, for example. So what is an exit really? And how does IPO sit into that?
What's the exit? I'm sorry, what?
What is an exit really? And how does an IPO sit into that? Both of and venture-backed companies and non-venture-backed companies also have different paths. And any comment to that? Or maybe Yen, you raised funding before as well, a lot of funding, right? For you, I mean, it was a funding option, but do you manage to take some money off the table throughout that journey as well?
No, I mean, I can speak from the founder perspective, and Bernard will speak from the VC perspective, right? I mean, first of all, bad news, guys, for the founders out there, right? IPO is not an exit option for you guys. If any of the founders looking for exit during the IPO wouldn't even happen. It wouldn't even be successful. Your investor will hit this, and then they wouldn't back you. To be honest, I think the IPO for all companies is just simply a milestone. It's for companies to gain enough capital, gain enough brand valuation or brand recognition, and also from the corporate governance point of view to continue to grow the business. For our case, none of the management team exit anything at the IPO stage, and we continue to believe that this company will continue to grow at a fast pace, and we have to live and die with this company.
I mean, you are under more public scrutiny now, right? I mean, it's a public company CEO. I mean, so the journey for you is
Yeah, so it's comes with a good and bad. I mean, on the IPO side, it comes the good side is actually you got a funding, you got a brand recognition, all the stuff. On the bad side, yes, I mean, as a public company, first of all, it's very expensive. To maintain as a public company, there's auditing, there's lawyer fees that actually do put on your bottom line, right? Do take out some money from your bottom line. And second, a lot of times on a public event, you wouldn't be able to give forecasts on things you do, because as a public company, you cannot do that, right? But I'll pass to Bernard to talk about the exit for the VCs.
Well, I mean, obviously, there's generally most VC funds will have pressure from their investors and LPs to wait on or look for exits, right? Whether it's IPO or M&A. But still, I mean, most funds are this sort of long view anyways. You have a 10-year cycle. You could extend it if you want. So I would say most VCs, at least in the US, are more patient capital. We see investors in Asia as a little more impatient sometimes, because we're obviously co-investors with some Asian firms, and actually even some European investors. They'll actually ask, hey, why don't you guys take money off the table, like at the mid or later stage rounds? But our response is like, hey, if you're looking for a 3x exit, why don't you invest in a PE fund, not a VC fund, right? So expectations are different.
So, and earlier you just mentioned that as well. You kind of talked through like the differences geographically, right? So take us more in detail. So what's happening now in the US? Let's compare maybe US and China, and Asia, and also Europe, since we're all here, and you've just entered the European market as well. How is the ecosystem doing? How healthy is the IPO market across the regions, across globally?
Well, I mean, obviously, we just talked about the IPO market, that it is healthy in the US. I mean, taking a step back, what's interesting lately is late-stage investors are back in the startup game. So I would say over the past year, if people remember 6-7 years ago, there were a lot of hedge funds that would go upstream, invest in late-stage VCs, PE funds that would also invest in late-stage VC deals. And I think most people in Silicon Valley consider them as irresponsible players, because their expectations on returns are much lower than VC funds, so they wouldn't be valuation sensitive. So once the market dynamics pulled them back, I think people were happy in Silicon Valley. But then Vision Fund launched. And Vision Fund, it's still not a VC.
For those who don't really know Vision Fund is $100 billion. Each investment is at least $1 billion, essentially.
Yeah, I mean, it's SoftBank's Vision Fund. It's more of like a private equity fund. It's a $100 billion fund. They invest in actually even mid-stage deals to late stage, and they aren't that valuation sensitive. So I think I would call them an irresponsible player within the ecosystem. But now, even this past year, at least in the US, hedge funds have gone back to the late stage VC game. And again, that's another irresponsible player. So.
It's actually a very interesting part. Is actually.
Do you get money from Vision? No, right?
No.
Do you choose not to, or? Yeah.
We're a public traded company, so if you want to buy shares on the second market, welcome, right? So I think China is actually very different. With Asia, China in specific, but Asia as a whole, is actually we see VC funds start to move to late stage. Yeah, literally we see an opposite trend where most of big VC fund, IDG, Sequoia, even GGV, some are investors. You look at even Hill House used to be as a VC fund, but no, now the fund raise is actually $8 billion fund, $13 billion fund.
But I think that is part SoftBank pressure.
Yeah, they start moving to a late stage, where the PE funds are actually got even squeezed to a bigger size now.
Well, that's right, because even in Silicon Valley, Sequoia recently raised a large late stage fund. And I think internally everyone was sort of talking about it in the Valley, saying, oh, they feel SoftBank pressure, right? Because they want to actually go in and be responsible investors or just not lose out, right?
Yeah.
And the FOMO thing, is that happening? Because I feel like, with SoftBank, like you said, being irresponsible and throwing money around, not being valuation sensitive, is there a good to that though? And the fact that some companies then have a large amount of money to play with?
Generally, I would say it's bad because, if you raise too much money at a high valuation, it's hard for you to sort of hit like your next metrics. But in some cases, it could be good. Like, we're just talking about WeWork. So I think WeWork is interesting because for a while, they have the co-working space. It's a real estate play, filling seats. And people long-term thought, oh, can they actually be profitable and make like good margins? But I think the amount of capital they raise allowed them to sort of figure out their business model. And the past 2.5 years, they went into the commercial property management space and competing with CBRE and Colliers and all these larger real estate companies. And they've quickly, I've heard, moved up the ranks where they're 4th globally in terms of private property management, which is stunning to me.
Which is having burned like many years operationally, right? To kind of build up that growth and user strategy.
Yeah, and also part of it, honestly, was trying to figure out what their long-term model was, right?
Which is an interesting topic because, one big critique that a lot of people have regarding the big tech companies, like Jay's Facebook as well, right, is that Uber, let's take Uber as a recent example, going IPO without profit, still losing billions and billions. Yes, revenue grows, loss grows as well, but there's a critique, and you're like, in the S1 is like, we may never make money, right? As a company, is that a valid business model? I'm not sure. I don't think so. You kind of went IPO also without big loss making at a point in time. Take us to defend why companies can go IPO and be available to retail investors to buy your share when your growth path is like, are you going to be a sustainable company in 5 years? I don't know.
Well, first of all, we are actually profitable first quarter this year.
Congrats!
So we just
after IPO, yay!
Yeah, so we just announced our quarterly earnings, so we're profitable first quarter this year. I think the IPO depends on the IPO market and also depends on regulations. The U.S. market, there's no requirement actually on profitability. If you look at China, Asia, there is a requirement on profitability. I think we actually got listed in the U.S., so I'm putting my sort of hat on the sort of U.S. IPO thinking. The timing all depends on the company itself. It actually depends on whether the company is looking for raise money or company, for us, it wasn't about money, but it was actually for the branding purposes. Then that determine at which stage you decide to list the company on. Obviously, the bankers will tell you the market's good, the market's not good. But to be honest, the process is 6 to 8 months. So for us, like when we started, the market was good, but then we end up with the market's not good. So you can never forecast whether by the time you got listed, whether it's a good market or not. It's actually very difficult to catch that. And also, I think from a company business point of view, it depends on really the business platform. I mean, for us, we're a product company, so product company people expect us to make money. Platform companies, people have different expectations. If you look at the, what they call e-commerce companies, e-commerce companies never made money, and right, Amazon. Look at Amazon, right? So, Amazon, it's like 10 years after IPO. I don't think it's continued to invest. As long as people believe that they continue to invest for future growth, it's okay.
That's right, but I think they could be profitable if they wanted to. They're just like trying to kill like 10 different industries at once.
So interesting. One question that we have a Slido with audience questions. So one question here is on, with more pre-IPO transactions starting to pick up, do you believe they will contribute to reducing the number of IPOs? So linking to your point regarding SoftBank kind of throwing money. So a lot more companies now have a lot more money to capital, kind of invest in companies, grow the companies, some choosing then to remain private longer. So do you believe that this will contribute to reducing the number of IPOs?
I think that trend was already done like 6-7 years ago, right? When it was a lot of late stage private money, private equity, and hedge funds going into these companies that we now see, going public. Maybe this whole vision fund and hedge funds going back into this market will sort of, restart that trend. But yeah, so we'll see how it plays out. I mean,
So we have 2 more questions here regarding kind of VC funds. I'm going to summarize these 2 questions and put it like this, which is that as a VC, And also, as a company, when you went IPO, how can VC funds and the portfolio companies work together specifically for an IPO? How do you work with your investors? Was there any specific strategic help, for example? I mean, here it's a much more in general, I guess, not specific to IPO, but how was that process like?
So let me speak from both sides, all right? So I used to, so now I'm CEO of a company, but I used to work for KKR, not a VC fund, but a PE fund. I'm actually on the KKR portfolio side, on the operation part. So as a new, when we select the VCs, actually our investors actually add a tremendous value to our company operation, not just the money itself. We get guidance from things like, help us to recruit, and they have a bigger network, so it helps us to open different countries, introduce different business leads to us, and they are also even help us on the IPO process. One of the cases with our lead investor was GGV, so they are actually very experienced in terms of IPO process. To the extent they know exactly which bankers are good, which bankers not. How do you run? At the end of the day, at the last moment, how do you allocate? How to do through the allocations. So some of the really nitty-gritty details, but actually very important. As a first-time entrepreneurs, you actually need those advisors and help you.
What was the most surprising thing during that process that you learned? During your IPO process?
Not a surprising thing. I think the most surprising thing for us is actually we did hit a black swan event. And we actually talked about that before the IPO. Says, hey, we talked about it. I told the bankers, hey, we're going to price this way unless we hit a black swan event. And we did hit that.
Touching on the question, I guess I was on the board, like what value do we add? Not on the IPO process, but just in general.
Yeah, just in general.
I think it really just depends on the stage of investors. I mean, we're accelerator, seed, Series A. I think we're definitely more hands-on, right? I mean, we get involved in the operations, product development, HR, marketing. I mean, for some of our engineering CEOs that can't write, I've literally written like 30 press releases for them. Because I'm like, you're not going to pay $5 to $10K for some PR firm. I'll just write it for you, okay? But as you go down, obviously, in your later rounds, it's a different type of investor. At the mid stage, like your B, C, and D rounds, I mean, those are more sort of financially oriented investors. The way they assess you are by finances, and the way that they could help you out is more in that manner. And obviously, all investors should help you in terms of, networking, introductions, et cetera.
So one question here is the title. The question is ICOs the future of VC funding? I'll add to that, which is that the whole movement now regarding more democratization, especially using blockchain and security tokens and stuff like that. How do both? I see some grin. You have a disagree. I would love to hear that. So, I mean, here the assumption is it the future of VC funding? Maybe. Thoughts?
Well, I think this question was sort of answered this past year during the downturn. I mean, this was a big sort of question 2 years ago, right? But it's just really shown that one, most of the altcoins whatever turned to crap, and then also I mean even back then during all the hype, especially because we run accelerators, we weren't ever threatened or concerned. People were saying, oh, is VC dead? Is VC dead? Well, we're like a mini YC in Asia. We invest $50K into our companies on our accelerator side. We get companies that already raised 5 to 10 million that want to be part of our accelerator program. So it's not about the capital, right? It's about the network and help that we provide.
Very good endorsement for you, yeah.
Right? So, but that's like us. It's like YC. It's a lot of early stage investors. So unless you're a repeat entrepreneur that has done it again, sure, ICO market could be viable. And even moving forward, I think it is a alternative path to investing, but I think it's will be at the mid stage or later. For the early stage, if you're a strong entrepreneur, you want the best investors and the best help.
So to conclude, the last question would be for you, NIU Technologies, so Yen, and then Bernard, which is that, what's up? What's the future for NIU Technologies? Where can we see you for the next, 6 to 8 months, 12 months? And then for you, Bernard, where do you see then? One question was that where should you invest in? I guess my question to you, linking to the topic, is that are there specific IPOs that you're interested in? Because you're not a CEO of a public, you're not under public scrutiny. You can speculate, you can't, right? So yes, so what's up for new?
So I couldn't talk about next 6 months or 12 months.
Oh,
I
no,
can
yeah,
talk about
forgot.
next 10 years.
Okay, next thing,
Yeah,
the vision,
sure.
overall vision.
No, I think, joke aside, we're, in reality, we're in the business trying to solve this urban mobility issue. Actually, I look around, it's a, we are not in the four-wheelers, we're in the two-wheelers. The reason we're in the two-wheelers because we actually look in the urban mobility, look in the city. Most of the people traveling alone. And, driving a car is not going to reduce the traffic jam, help you to get to your office faster. And you need some what we call individual traveling devices, and you want something to be cleaner, convenient, get you from A to B much easier, smoother. At this point, I think an electric moped is a perfect solution. But down in the future, I don't know, 10 years down the road, maybe something different, but that's something we're always working on because I think, as this urbanization continue to go on, I think cities going to get more and more congested. I mean, think about how much time you guys take to get to this place in Paris, right? So it took me 2 hours from the airport to this place. So city is always going to get congested. So how do you solve that urban mobility issue is something new technology continue to work on. And we actually attack it from what we call individual transportation point of view.
Okay, thank you. And Bernard?
I'll sort of pass on the IPO market, and I'll answer the question directly in terms of like
Sure.
what markets that we look at. Since we're global investors, I would say when we assess the ecosystem, we do it by cities, and then we look at the talent base in terms of engineering talent, management talent, product talent, and then we look at the activity in the early stage investing, mid stage, and then we also look at the historical exits. So there's certain markets that we're eyeing right now that are interesting to us. I mean, we're already in 9 locations: Seoul, Taipei, Beijing, Sydney, Shenzhen, with a corporate accelerator with Ping An. But other ones that we're eyeing that are interesting are obviously Tokyo. So Tokyo is an example where there's world-class engineering talent, but the VC ecosystem is underdeveloped. But more importantly, there's this lack of sort of entrepreneurial drive. So it's interesting because it's such a big market, and there's such strong talent there, but that culture isn't there. But then when we come to places and look at cities, let's say like in Europe, like Berlin and Paris, there's a lot of strong engineering talent. We think the culture is there in terms of entrepreneurial drive, but the VC ecosystems are a little underdeveloped. And also the exit paths are more limited because it's really only M&A most of the time.
Yeah, it's starting, and that's why also like the company I'm with, Entrepreneur First, we're here because a lot of deep tech talent. But okay, that's the end of our time. Thank you so much, Bernard. Thank you so much, Yen. And my name is Gwen, and enjoy the rest of your afternoon.